Hi guys, welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Well, what a blockbuster move on the Sensex today. In fact, it was a strong start to the September series after a downbeat end to August series. We saw a 550-point up move coming in on the Sensex and a triple-digit rally coming in on the Nifty. 181 points higher for that index. 19,435 is where it shut shop at. And the interesting part is that we have snapped out of a 5-week losing streak. So this is the kind of a blockbuster Friday move that the markets were waiting for and has finally come by. So let's take a look at what the other indices were up to in today's session. Sensex, as I mentioned, up over 550 points. You had the mid and small cap indices hitting a fresh high in intraday trade. In fact, advanced decline ratio was firmly in favor of the gainers. In fact, the India VIX index has also cooled off quite significantly. Metals as a pocket was shining given the fact that the China PMI data has sprung an upside, upward positive surprise, and that's something that spurred buying interest in metal counters. So PSU banks, autos, energy were among some of the other sectoral movers. Nifty Bank, that was not doing all that well in the first half of the session, but that also managed to stage quite a smart recovery. In fact, towards the end of the session, the Nifty Bank index ended higher by about 1% or thereabouts. PSU banking index also doing pretty well in today's session. But what didn't do all that well was the pharma pack. That was the only sectoral laggard in today's session. If you look at some of the other Nifty gainers, NTPC, ONGC, in fact, ONGC surged somewhere around 4% or thereabouts on the back of a surge in crude prices, which are now hovering around that $87 per barrel mark. Tata Steel, JSW Steel, Maruti, among the other movers. In fact, on the losing end, you had Cipla, Dr. Reddy's, HDFC Life, Ultratech Cement and Nestle. Let's also look at the broader end of the markets, given the fact that there was a lot of action, when it comes to mid caps and small caps as well. Some block deals continue. Five-star Business Finance saw a block deal wherein 9.2% stake changed hands, and that stock was under some bit of selling pressure today. IDFC First Bank was another counter that saw a block deal of somewhere around 4.5% changing hands. Genus Power, that stock was rallying on the back of a 2,200 crore rupee smart metering order. That stock was in fact locked in upper circuit today. ITD Cementation bagged a 3,200 crore rupee marine contract, so that stock was up somewhere around 10 to 12% or thereabouts. And BSC, that stock, look at that stock. I think each day of this week, that stock has gained. Yesterday, it was up 10%, and today it had revised its buyback price to 1,080 rupees per share. But then I think it shot past that level as well. Among the other Nifty 500 gainers, you had BHEL. That stock was up 13%. DCM Shriram, Vodafone Idea, India Cements, IRFC, railway stocks were also, gaining mojo today. On the losing end, on the Nifty 500, Brightcom continues to be under pressure. Poly Medicare, HDFC AMC, that saw some bit of action yesterday on the back of MSCI rebalancing, was also under pressure today. And Torrent Pharma, that stock was also under pressure. But let me also bring on board our technical guest for today. Joining me is Ajit Mishra of Religare Broking. Good afternoon, Ajit. Thanks a lot for joining in. Finally looks like we have edged past that 19,400 mark, snapped out of a 5-week losing streak. But do you think next week we will see the momentum build from here and perhaps a reclaim of 19,500 on the cards?
Yeah, good afternoon, Nandita. So, Nandita, course, could not have asked for any better start of the September series than this. Yes, it's a good close. We have ended the 5-week losing streak. But Nandita, one thing which we have been, noticing consistently is that earlier on also we had these kind of attempts where index surpassed the hurdle of short-term averages around 19,400, 420 levels, which was placed earlier, but it couldn't sustain. So indications are favorable because the downside was capped. We made multiple attempts to break 19,200 mark on the Nifty, but somehow we managed to hold. So after this, such a strong, range-bound consolidation, it seems like that bears are slightly losing control now, and on the sectoral front, metal, auto, IT counters are holding strong. Banking have shown resilience selectively. So all these factors put together are indicating that yes, this rebound can extend. But will it turn out to be a reversal? That we need to see.
All right, we'll have to see whether or not it turns out to be a reversal, or is it just a short-term bounce is something we'll have to watch out for next week. But before I come to you for some of the stocks that I want to talk to you about, let's talk about some of the auto sales figures that have come out. In fact, Maruti and M&M, these two stocks have hit a record high in today's session. Maruti sales have come in higher by about 14.5%. That was largely in line with estimates. M&M auto sales beat estimates, up 19%, highest ever SUV sales for M&M. Tractor sales were obviously under pressure given the fact that we've seen deficient monsoons. So even Escorts saw an 8.5% downtick in August sales, missing estimates. Bajaj Auto 15% down on a YOY basis. However, it came in higher than what the street was expecting. And Bajaj Auto, in fact, management was on CNBC TV 18 today and has said that retail growth may pick up to 5 to 8% or thereabouts in the upcoming festive season. Tata Motors, in fact, sales were down 1%. How they were below estimates. But let's talk about Maruti first, Ajit. This stock hit a fresh record high today, surpassed 10,000 rupees mark again. And brokerages have pegged targets in excess of 11,000 or thereabouts. How is it looking on the charts now?
So again, I can't recollect that last time when we saw these kind of moves. It means nearly 9% kind of gains in Maruti in a week, with very strong volumes. So I definitely feel that this kind of move with volumes around the record highs, that clearly indicates that the overhang that we had earlier around this 10,000 mark is over now, and the move is going to be upward, from here on also. But should we enter at the current level? I feel that one should wait for any dip, because the recent surge from 95 to almost 10,400 mark was almost vertical. So let's wait for any dip around 10,200, 10,100 zone, in case if we are planning to enter, initiate a fresh trade. And 9,900 should be your stop for that position, and for the positional target of 10,800 to 11,000 levels.
All right, that's the view on Maruti, but let's also talk about the two-wheeler space. Aisha has relaunched, or in fact launched Bullet 350. Base price is at 1.7 lakhs or thereabouts, and mid-range is 1.9 lakhs and top end is 2.16 lakh rupees. Yesterday we saw, in fact just a few days ago, we saw Hero relaunch Charisma as well. Lots of competition in the premium bike space, and Hero Moto, of course, is recovering after the whole, ED raids that happened, in the company's top management and offices as well. But in the two-wheeler space, comparing a Bajaj Auto, Hero and Aisha, which one would you say is looking most attractive on the charts at the juncture?
See, in case if you have to choose one among these three, I would go ahead with Eicher. Considering that in July we had this, a sharp decline in the stock, as it retraced from 3,600 to 3,100 mark just in a week time. And since then, we have been seeing a gradual recovery, and this week this recovery has strengthened. Means we have managed to form a decisive candle on the weekly basis, while holding up the short-term averages. So that indicates that the overhang that we had, after this fall, is somehow over now, and we are going to see a gradual recovery towards, let's say, 3,550, 3,600 levels in the near future. It's not that the other two are not looking good, but if we, having a view, let's say for a week or two, then Aisha could outperform.
All right, that was about the auto pack, but let's also talk about Genus Power then. This stock was up, has been up somewhere around 10% in the last 5 sessions. In fact, today it was locked up in upper circuit. It has bagged another smart metering order worth 2,200 crore rupees or thereabouts. It's the third order that the company has won in the last 2 months. Total order book is somewhere around 11,000 crore rupees, and it expects a significant recovery from the third quarter onwards on the back of robust order inflows. The shares are up 50% in the last 1 month, and I think on a YTD basis, the stock has given somewhere around 3x returns already. How does the chart look going forward now, Ajit, here onwards?
So that's right, and that's almost like a dream run. In last just 3 months, the stock has inched from 80 to 270 levels. So after such a phenomenal surge, it's very difficult to comment on the pace of rise, or maybe if this momentum would continue. Because of late also we had the phase of consolidation, profit taking in the stock. So those who are riding it from the lower level, they can continue to trail their stop losses and maintain a trailing stop at 245. But for fresh entry, I feel it's too late now, considering the kind of move that we have in the stock, and there's hardly any consolidation during this journey. So stay away in case if you're planning any fresh trade. But yeah, for the existing position, you can maintain stop at 245 and keep on trailing your stop losses on every rise.
All right, that's the view on Genus Power. But I also want to get your thoughts on the banking pack now. Banks have also been pretty iffy in the last few sessions. Today, at least in the first half of the session, it was literally in the red. But in the second half, it did gain momentum, and now we can see the bank index ending higher by nearly 1% or thereabouts. Where do you expect the Nifty Bank to head from here? 44,430 or thereabouts right now. Any chances of 45,000 being retested?
Nanda, in fact, last week we had this, a close wherein banking ended marginally in the green, while the Nifty, settled almost, with marginal decline in the in red. So now, in continuation to what we had last week, means the reversal candle is somehow a similar kind of a formation that we have this week also, means a green closing, though it's not very significantly higher, but still, yes, we could hold 100 EMA second time in a row on the daily chart. So this indicates that yes, selectively we'll continue to see the buying coming in on every dip around 43, 800, 44,000 mark. But upside hurdle is still intact, as you rightly mentioned, that 45,000 is still going to be a critical resistance to cross. And once we cross 45, then there's a possibility that there could be a sustained up move in the stock, which could, in the index, which could help the index to make a new high. Otherwise, I feel that it might see, a very restricted buying in select, banking names. Like today, we had some of these PSU banking name doing well, and the other day it was select private banks. So be very selective, and we are not very bullish until we cross 45,000 mark decisively in the banking.
All right, that's the view on Nifty Bank. But what are your thoughts on BSC? This stock is up somewhere around 25% this week itself, and it has revised its buyback price to 1,080. Now it has run up past that as well. Should one chase this momentum in BSC now?
No, Nanda, because we have crossed this record high that we made last in March 2022, and 23% in this week itself. Volumes are great, everything looks great, but I feel that if the view is short term, then one should not chase the momentum, because the risk to reward is favorable, because the stock comes close to around 930, 920 levels. So if you are okay taking such kind of a risk, which we usually recommend not to do so, considering that we are not in a clear bull run, or like we are seeing outperformance from the broader indices that is there. But still, when the risk reward is not in your favor, then one should wait for any consolidation or a dip. So for BSC, 1050, 1000 range would be the ideal area where one can look to initiate fresh long with 920 as a stop. And since we're in uncharted territory, it could be close to around 1200 plus level that we might test.
Right. What about BHEL? On the back of order wins, even this stock has been on a tear, and in fact, just about today, it has rallied 12%.
So BHEL, I can recall this, that prolonged corrective tone or phase, like almost 13 years. We made a high around 2010, around 320 levels, and since then it has been a gradual decline in BHEL. Finally, in the recent months, we've seen the stock surpassing that declining trend line, and since then we have been seeing a very strong move. So it's almost like from 70, the area of reversal, to almost 140 now. So we believe that yes, this momentum is likely to continue after such a long consolidation corrective phase. But for the short-term traders, again, I would recommend considering the kind of move that we have seen. is to wait for any dip around 130, 125 levels instead of initiating any fresh long at the current zone. And with stop of around 115, then they can wait for 150 plus zone, let's say in a week or two.
Right. I don't recall asking you about metal stocks. I think they have been, at least this week, 3 out of 5 sessions they have gained. And today, of course, they were the biggest sectoral gainers. There's been some, positive surprise on some China PMI data that has come in, and that has spurred buying interest in this pocket. But, if you compare a Tata Steel vis-a-vis Hindalco or JSW Steel, which one is the best poised on the charts at the current juncture?
I'll go ahead with Tata Steel for sure, considering that again for Tata Steel also we had this decent corrective phase which lasted for nearly 2 years, and around 115 we had this trend reversal, and since then we are seeing gradual basing and followed by recovery in the trend. So this week we have gained roughly around 9%, and we expect this momentum to continue. So close to around 132 is what we are eyeing as an immediate target, and positional target a new high close to around 140 plus them. So maintain longs, you can create fresh also with 120 as a stop.
All right, that's the view. Tata Steel looking, best among the metal stocks. But what about the five-star business finance? Stock was under selling pressure today, given the fact that there was a block deal. But over the last 1 month, it has barely, in fact, it has been in the red, down 3% or thereabouts. How should one trade into this counter now?
I seriously feel that one should avoid the recently listed names, especially in case if this trend is not clear. Though five-star, yes, it has done well, but volumes were missing, and the negative part is that when the stock is declining, we are seeing rise in volumes. It's a pretty clear, negative indications that we have in the stock. And in case if you're holding, maintain stop at 715. For the existing position, and in case it witnesses any bounce toward like 750, 755, you should exit.
Right, and the last stock that I want to ask you about is Nazara Tech. Of course, when the whole GST on gaming issue had cropped up, we saw all these gaming companies getting hammered out of shape. Today, of course, there was a CNBC TV18 exclusive wherein sources have said that Zerodha founder is looking to up his stake in Nazara Tech to 3.5% from 1% or thereabouts. Down 3% in today's session, but over the last 5 sessions, it has done fairly okayish for itself. Should one avoid these gaming stocks now?
See, it looks comparatively better to what we saw in Delta and the other names. I feel that Nazara, the recent price action indicates that yes, there's sign of reversal. Though after today's cut, again, it might look like the journey is not going to be very smooth. But if you are holding longs, you can continue to hold with 720 as a stop, and gradually we can see the stock graduating towards 850 plus levels. But in case if you are chasing momentum, then one should avoid.
All right. If you're holding on to it, hold on to it. But otherwise, perhaps you should avoid. But any stock recommendations for next week, Ajit?
See, Nanda, instead of like stock recommendation, I can name few sectors which one should keep on radar in case if this momentum continues. So auto, IT and metals.
Right.
So in the auto, we discussed about Maruti, which looks still promising. Then one can add M&M also to that list. In the IT space, I also feel that the kind of consolidation that we are seeing is likely to end on a positive note with TCS, HCL Tech leading the pack. And lastly, in the metals, Tata Steel we have discussed. In case if you can manage volatility also, then JSW Steel is also one of the candidates which one can look at.
All right, so watch out for auto, IT and metals. That's the view from Ajit. With that, Ajit, thanks a lot for taking out time and joining in this afternoon and sharing your thoughts with us. We are heading into a happy weekend given the fact that we have snapped out of a 5-week winning streak. I'll see you sometime later on my show, but wishing you a very happy weekend and have a great and relaxing weekend.
Same to you, Nanda.
Thank you. Thanks a lot. Well, with that, we have come to the end of this edition of Closing Bell. If you have any comments, leave it in the comment section below. And of course, have a great weekend and come back and join us on Monday morning on Morning Trade as we take all the market action forward. But from me, it's a goodbye. Thanks a lot for tuning in and stay tuned to Moneycontrol for all your other news and updates.